Hey everybody, welcome to CRE Power Hour. I am feeling in a very good and frisky mood.
I think we might have to apologize during the show. What do you think?
Are we gonna just like ask for forgiveness later, or are we just gonna apologize up front?
Let's just apologize up front and get it out of the way.
Okay, sorry everybody. So, welcome to the show. This is CRE Power Hour, and Stephanie, you and I have been doing this show for over 2 years now. Did you know that?
Gosh, no. Shut the front door.
That's a little bit different than it sounded a few minutes ago before we started our live show. And Stephanie and I, between the two of us, we have over 4 decades of experience in the real estate industry. And we wanted to create a platform where we can talk about the things that people don't talk about. Commercial real estate is very much a secretive, quiet business. And we want to put out the stories, the success stories, the strategies, the tricks, the tips, and hear about some innovative technologies and just what people are doing out there. So that's the purpose for the show. And thanks for tuning in. Today we have Sandy Gordon, who happens to be not only an amazing businesswoman, also a dear friend of mine. And she's with Nevada State Development Corporation. She specifically specializes in SBA 504 loans. So Sandy, welcome to the show. Thanks for being here. You're fabulous.
Thank you.
Tell us about your background and just, bring us up to where you are now. And then we already know what we're going to talk about today. So
great. No, thank you, Lisa Marie and Stephanie. It's so nice to be here, and thank you for the opportunity. My background consists of many years as a bank professional, mainly working in consumer lending for years as I was raising my son. And then also at a point in time, I became a licensed contractor. So I was a licensed tile and granite marble contractor for 12 years as well. So I know what it is to run a business. And so going from there, kind of pairing that with my banking background, I started in banking when I was in college. And what was a very rude awakening for me, as soon as I went to work for Bank of America, they thought it would be a great idea to put me in as a collector. Oh. I didn't even know what a credit card was. And they're like, well, you're going to learn a lot. I said, okay, how hard could it be? I'm 18. I'm a freshman in college. And they said, we're going to have you mainly in 1980 handle home foreclosures and car repossessions. I had to go out on site for car repossessions. I had my life threatened. I had 2 big men who would go with me. I'd have to be the one there representing the bank while they anchored the vehicles and drove them off, people threatening to kill me.
Oh, man.
And then in home foreclosures, it was also very interesting because essentially people would just yell at me and berate me. And 1980 was a tough economic time. The prime lending rate was 21%. Did I know what that meant at the time? Absolutely not. I just know that everybody was angry. And so I am telling people that if they don't pay their mortgage, we're going to have to foreclose. And then again, life threatened everything else. And I thought, well, it might be a good idea to keep good credit. Might be something to focus on. Going forward, I kind of took that with me and learned more and more through working in the finance industry, working in consumer lending, and then working as a tile contractor for 12 years. And at the highest point, I had 25 employees. They were all men. And I was considered the little woman in the business. And, but I really,
little did they know,
because again, kind of from my banking history, when your money is on the line and your business, you want it to thrive, but you also want to do right by your customers. You're going to do whatever it takes to succeed and to move forward and to make sure that your company is doing the best that it can. But I tell you, it enters a lot of interesting things when you have 25 employees. And I'm like, could we install a piece of tile today? That would be amazing, instead of having to deal with human resources issues, right? So it was one of the best educations I could have ever gotten. And so I went from there and went through a series of different life changes, and had an opportunity roughly 9 years ago to come to work for Nevada State Development Corporation. I really was not completely familiar with Nevada State Development Corporation and was kind of referred into the organization. And that's when I started learning more about the SBA. I really wished I would have used the program years previously as an owner user to purchase commercial real estate for my own business. But that kind of set me off on a tangent, working with Nevada State Development Corporation, learning all about the SBA's 504 loan program, and then taking it from there. Yeah, that's kind of the gist of, yeah.
I have a new nickname for you, Sandy. Do you want to know? Do you want to know what it is?
Absolutely.
Okay, you ready? It's Dog the Bounty Hunter.
Oh my goodness.
I'm going to get you a blonde wig.
Yeah,
And
that's
gold
hilarious.
chains. Like, this is your Halloween costume next year, okay?
I think that sounds perfectly suitable. Yes, because that might have to be my retirement career. That could be kind of interesting.
There you go.
I'm gonna hold that thought. Yes.
Because Sandy looks sweet, and she very much is. But you are a powerhouse. You're a badass. And that's why we have you on the show. And
thank you.
That's a really interesting career. Stephanie and I know other women in the commercial real estate field that are general contractors as well. Brittany from EXP Commercial, she's a general contractor. So talk to us. I'm a huge fan of the SBA. I know you are too. That's one of the things that we have in common. Yeah. Will you talk about the Small Business Administration and just how it
Absolutely.
And how it helps businesses and helps promote small businesses across the U.S.?
Absolutely. The U.S. Small Business Administration was actually birthed into being by President Dwight Eisenhower in 1953. He created the U.S. Small Business Act. And at that time, they saw that there was going to be a need in many different ways for the country to actually support small business, because as we all know, and especially at that time, that was going to be the foundation of our communities nationwide, was small business. And so they birthed the SBA into being. And then following that, roughly 5 years later in 1958, they were still at that time looking at what else could they do for small business owner users to allow them to be able to purchase commercial real estate and be able to solidify themselves in their neighborhoods, in their towns. Because that way, if they were able to purchase and finance commercial real estate, they wouldn't have to be thinking about their rent. When's my rent going to change? This becomes another focus. While they're trying to keep all the other balls in the air, if they had solid, actual place to do business and not have it be at someone else's control, that they could get more done, and they could do the base premise for what the SBA wanted: build that labor force and create jobs. Creating jobs is one of the most predominant factors of the SBA's 504 loan program, because every business that comes to us for financing, we're asking them, how many jobs will you be able to create in the next 2 years based on getting the financing for this building? So it's a very, very big focal point, because above all else, Nevada State Development Corporation, and then I'll go back to the SBA, is a certified development company. We are one of many throughout the entire United States, but we all offer the same product, and that's the 504 loan program. And so this program, what it does and what's different about conventional financing for the business owner is the fact that you get a loan that a portion of it, roughly 40% of financing. And again, there's so many caveats, so I'll try to succinctly pull it together, but you may have to reel me back in. Because when you look at a 504 project, it means that a bank lender, and what is a bank lender? it's going to be a traditional bank, a credit union, or an alternative financier, or maybe a non-bank lender that brings 50% of the project financing, while my company that I work for, Nevada State Development Corporation, acts on behalf of the U.S. Small Business Administration by bringing 40% of the project financing. And this is a basic scenario. It gets a little more in depth. And then the loveliest part, that business owner has a 10% down payment.
I love that.
Right? 10% down. You don't find that in most other conventional real estate financing. And so along the three caveats that I always say to people that make the program so fabulous, 10% down payment, 40% of the financing is tied in for 25 years and a fixed amortization with the lowest interest rate in commercial financing typically. So for instance, right now on a 25-year fix, the rate is 6.28%. So when we're working with that other financial institution, they're bringing their rate to the table for 50% of the financing. And that's roughly going to be anywhere from 6.75% all the way up to 8%, depending on the institution and what their focus is, their paradigm of what they're trying to build in their portfolio. So that's what makes the program successful. But you originally asked me about the SBA. And
so let me stop you for 1 second. So this is a part I think that a lot of people don't realize, because, you know, Stephanie and I will talk to someone who's looking to lease space, and I inevitably will bring up the conversation of, have you thought about purchasing your own location?
Right.
And a lot of people don't know about the SBA program. Essentially, it's two banks and the buyer partnering, right? So there's three parties involved.
Exactly. Mm-hmm.
It
is. And so it's a little bit interesting, and it has one factor that makes it more unique than any other financing program. And that is the fact that you end up, when all is said and done, you end up with two loans each month that you're already paying. One to the primary bank lender in the deal, who holds the 50% of the financing or loan to value, and then one to the SBA. And so you've got two loans for the duration of time that it takes you to pay off that lending. Mm-hmm.
Wow.
Yeah.
Sandy, with you know, because there's a limitation on this loan, right? It can't be for the $20 million purchase out there. It
can.
So explain that, because there's a lot of misconceptions as it relates to SBA and what you can and can't do with it.
Right. No, and thank you for bringing that up. So there is a cap on the owner's ability to get financing. So when we look at the structuring of a project, and we'll see this in larger hotel projects where we've got an owner user who's an hotelier and they're purchasing many hotels, they have a cap of SBA financing up to $5 million. Okay. So they've got $5 million in debenture proceeds that they can access as long as they qualify with their debt service coverage. And they can get up to $5 million. Now, keep in mind, we may only be able to cap at that $5 million, but our banking partner in the deal, if they are wanting and have an appetite for this project, they can carry another $15 million or more. It just depends. So even though we cap, our bank partner will still want to take on the residual of the financing required. And for a hotel, the interest rate, or excuse me, the down payment on a hotel can be a little bit more than the 10% down payment. I don't think you want me to really caveat into all the details, because I could go off on many tangents. So
right.
But yeah. So it's nice to know that we will have, for instance, we've had hotel individuals who own hotels in our community here in the Reno-Sparks area and all throughout the state of Nevada that will access that money time and time again. They will cap out at their $5 million with several properties. They'll pay everything off. They'll come back. They'll access that $5 million in capital again. Mm-hmm.
Perfect.
Yeah.
When you know, at the $5 million cap, do you ever see the SBA increasing that as costs in general are rising?
You know, the only industry that they've really increased that is with manufacturing. They will go up to a 5.5 million. But not really. You know, the program does go through significant changes, and it certainly has during the pandemic moving forward into 2024. but not so far. No,
Okay. It's
doesn't
just
mean it won't.
right. And then that's what I was curious about. When was the last time it was ever increased? Do you know that answer?
That is a great question. I don't know the last time that it was increased. I can Google right now if you want.
That's okay. That's okay. I was just curious as to,
I know.
oh no, she got excited and left. Oh, there she is.
I don't know. I know, right? Okay.
I was just curious because look, things are getting more expensive, and the Federal Housing Administration,
Right.
they're making increases pretty often as
Right.
the cost of housing has gone up. And so that's why I was curious about the SBA.
Well, and you bring up a good factor because yes, you're absolutely right. Things have increased, well, astronomically recently, right? One of the things that the SBA did to increase the eligibility factor for entrepreneurs recently, effective March 18th, they increased the tangible net worth guideline to 20 million. And they increased, and I'll explain more about that. They increased the revenue over the past 2 years to 6.5 million. What that means is when we think about small business to the SBA is a company that has a tangible net worth of 20 million or less,
Okay.
with a revenue stream over the past 2 tax cycles of no more than 6.5 million. So because the SBA wants to keep this program focused strictly on small business and the owner user, they have seen that there was a necessity to increase those restrictions and guidelines for eligibility. Size standards is what the SBA calls it. So they've made changes there. So Stephanie, it could be that in the future we may see some differentiations to that 5 million cap, but not at this time.
Okay.
And yeah, so that's kind of the story on that.
Very good. Are you seeing, because we do a lot of business sales as well as commercial real estate, and we're doing these all over the country, actually multiple countries. And we're seeing a huge influx of the baby boomers retiring, which is why we're getting them listed.
Right.
And then we see a whole entrepreneurial generation that's up and coming, right? That want to be business owners versus go to work for corporate America and so forth.
Right.
So, one of the things in the past that a lot of people, we love SBA too. We run a lot of deals through the SBA. Right. I wish the cap wasn't as low as it is because things are going up, but it is what it is. Do you see, because I know back in, was it September that they made it to where you had to they had other opportunities to leverage some of your personal belongings that you already owned and things of that nature. It's a little bit more, it's added a little bit more time to the deal. As far as other assets that somebody owns, is there anything can you speak to that at all?
So when you say other assets, are you meaning that they can offer
Other real
additional
estate
collateral to
Yes.
the project? Well, that is very predominant in the 7A. So
Yeah.
the SBA also has the 7A program, and most absolutely all the time when a lender is procuring a 7A loan with a business owner, they are not only going to take the fixed asset being financed, the commercial real estate or the heavy equipment, they're also going to look at securing that guarantors other assets, personal property, investments, and maybe even putting up cash.
Yeah.
So yes, that is very predominant of the 7A. The SBA typically, and in most circumstances, the only thing that we encumber or take as collateral is the fixed asset being financed. And that's another thing that made the program very, very popular, because one of the misgivings that will happen with a lot of individuals, and I'm not saying everyone, but I will say that a lot of individuals will get this 7A loan. And oftentimes it will be a situation where they're kind of running under the gun. They want to get it done quickly. They're not necessarily wanting to have 2 lenders involved. And so they will opt for the 7A, which typically has a variable rate tied to prime and that lender's index. But then they'll go ahead and say, well, what could be the problem of encumbering my personal residence or an investment property or that? Until somebody decides, well, I want to put in a pool. I want to do this at my house. And it's like, no, you can't do that, because your your home is our home right now. You know, the lender is saying we own your home essentially right now, so there will be no improvements. And so that can oftentimes be a little disconcerting to
Right.
you know, to borrowers.
Well, and I think that's a benefit to buying a business that has real estate, or buying the business that might be leasing, but go find a new place to relocate it and own the real estate, because that is the big
Absolutely.
difference between those two loans. The 7A has to be done when there's no real estate financed in the deal, period.
It does, you know, because
Yeah.
that's, we will oftentimes, we will have a bank that will come to us because a large portion of our business is strictly referral by all of our amazing lending partners that we have in the state of Nevada. And they will bring us a project and they will say, hey, we've got a piece of commercial real estate here and we've got a business acquisition. So we go, wonderful. They're like, we're going to go ahead and do the business acquisition financing piece through the 7A in companionship with you doing the 504, meaning NSDC performing on the 504 for the real estate. And that is the perfect scenario, because that way, that when they're getting their real estate financing, they're really getting the best rate for that real estate through the 504. The 7A is a very necessary program and an excellent program, but it has its limitations. But right now, the SBA post pandemic is still offering some waivers of guarantee fees and so forth. I can't speak to that at length with the 7A because it's not my program. But again, like everything else in life, certain things serve the best purposes, right? So, yeah.
So going back to the SBA, how it started, and
Yeah.
really the goal of the SBA being to create jobs. And it's interesting because I was in a CCIM class just a few weeks ago, and one of the things that we were working on calculating when, let's say, Stephanie has a client that is looking at 3 potential locations for relocating their corporate headquarters or opening a new store. And in the CCIM class, we were looking at one of the determining factors for looking at locations is how many jobs it creates. And part of that is based on the labor pool in a specific area. So
Right.
maybe we're looking at a 5-mile radius or a 10-mile radius.
Right.
And it was interesting to learn about calculating new jobs based on base jobs and non-base jobs. And so does
Right.
the SBA get into that sort of calculation, or is it just because every job created can create more jobs beyond that? You know, there's like a ripple effect.
Absolutely.
Does the SBA look specifically at the number of people that a small business is going to employ, or do they look at that larger calculation that we were looking at in the CCIM program of how it would impact the community as a whole?
Well, essentially, there's a couple of things, because it's, you know, because we've gone through some interesting economic times with the Great Recession.
That's a good way to put it.
Right. I know, right? It was very interesting. I know. And you know what they say about that word, interesting.
Yeah.
And so when we kind of factor from that time frame, and then the SBA would look at, are there, you know, what is the labor force in Nevada communities and counties? And they would deem certain labor forces as having an excess of employees available or not enough employees available. And then actually, when we are looking at underwriting the 504, what we basically have to look at, and this will go into another subcategory as well, and it's based on a couple of factors, like, well,
do you look at like the standard industry codes or the NAICS codes, or
we do look at industry codes, but it kind of becomes even more basic. If we have a business who is buying a building in an opportunity zone, it might be that they are being asked to create 1 job for every 75,000 in only the SBA portion of funds that they are allocating.
Okay.
If they are not in an opportunity zone, and again, these are moving targets that can change on a regular basis, depend on where the SBA domiciles its focus. And if they're not in an opportunity zone, then they might say, well, for every 65,000 that you're accessing of that 5 million in SBA funds, you have to create 1 job. So the underwriter, while putting together their credit memo for presentation to the SBA, will say, how many jobs do you complete or do you plan to bring into existence in the next 2 years? Because on our application, when we send it out, that's one of the primary aspects. How many jobs will you create? And again, that takes us into a whole other realm of eligibility with the SBA because it's a government guaranteed loan program. But hopefully that answers your question about job creation.
It does. I just found that to be so fascinating that as a commercial real estate broker and CCIM candidate, that we can actually do these, advanced calculations from the user perspective about labor pool, jobs created, and how that impacts the economy and also the neighboring businesses. Because if you have a business, you want to be by businesses that are going to bring you more customers.
Exactly. And again, that goes back to that whole, the whole community, right? You're there within the whole community. And how does the community grow together based on everybody's individual focus,
Yes.
So I think that's a great point. Absolutely. Yeah. Me too. Yes.
What else?
Do you want to know more about how the program is funded?
Yes.
Okay.
We would love that.
Okay. So
It's unanimous.
yeah. Okay. Thank you. I love that. We have a
Shut the front door.
Perfect.
Shut the back door.
I love that. So, the SBA itself does not have the funds to loan. So it is a government guaranteed loan program. So this will bring us back to a few of the ways that the program is structured. And basically the way that the SBA funds this loan program is we have a couple of approvals. So when we are pulling in a borrower and we're starting to process with them in the front end, originating their loan, getting everything together that they need for us to underwrite the project, we're set out to get to the first approval with the SBA. When we get the SBA approval, we have to get an approval on an application, an appraisal, as well as an environmental report. We get all three of those approvals and we go back to our bank, lending partner, whoever they may be in the project, and we say, we have the three approvals for you. Because the reason why the banks love this program, they only have a 50% stake or risk in the deal. So and especially right now with rates being a little bit higher, they absolutely love that. So they say, great, thank you very much, SBA, for all those approvals. They will now draw their documents. They will go ahead and proceed to close the loan. So they will close. The borrower will take possession of their building, or if they're doing ground up construction, a building project, they'll start their construction. And in turn, what happens from there is they will go ahead and get everything in order. They'll be domiciled in their property. Everything is great. Only then do we go to work on the second close of escrow with the SBA. They're not simultaneous.
Yeah.
And this brings us back to the originating question. So we go ahead and we get everything together to ask now that the SBA, the bank is closed. We would like permission to close as well. We give the SBA everything that they want again for the second approval for closing. We're not short of approvals. And then what the SBA does is these loans go into specific guarantee pools or funding groups.
Mm-hmm.
The SBA pulls them nationally, and they're actually, for lack of a better way to put it, they are put out on Wall Street. These investors in the program, which are not the government, they can be institutional investors, big business investors, which would be that tangible net worth that exceeds the 20 million, or also personal investors. They will fund the program by buying debenture bonds, a type of insurance bond. And in turn, when they buy those bonds, they are agreeing to fund these loans nationally in these separate guaranteed fund groups. And in turn, our borrower then gets their financing.
Wow.
Now, so I do want to hit upon this because it's really important. That is why there is a prepayment penalty on the SBA portion of financing that constitutes 10 years. Because those investors in this program who said, I will give you the money to get your building, They're guaranteed a certain rate of return based on the interest rate that the borrower structured and landed at and locked in at. That investor will get a certain rate of return, nothing that affects the borrower, and they will also get tax benefits, which I'm sure is probably the more important aspect,
Sure.
right? So that's that. Yeah.
So this is what I think makes the SBA loan so appealing to the partner banks is all of the work that you, as specifically working on this 504 program, you know, I tell my clients it's going to be a lot of paperwork up front. It's okay. Don't get scared off. Just get everything in right away. And then doing the appraisal. And then the third piece can sometimes be a bumpy road, and that's the environmental inspections.
Yes.
And so I see the way that you've laid it out is very appealing to the credit union or the alternative lender or whomever the third party is, because you've done a lot of the legwork up front and presented a package so that they can close first, and then you can go to the SBA and close second. And it also makes sense about the prepayment penalty on the SBA side. So, you know, a lot of times when we're working with clients, Stephanie and I, they don't necessarily really maybe understand, like when you got in the business, didn't understand all the workings that are going on behind the scenes, because our job is to make it look easy, right?
Right.
That's why we partner with people like you that are experts at what you do. So has there ever been a scenario where the initial lender, that partner funds, and, you know, the person's moved in, the business owner is moved in, and then you present everything to the SBA and then there's a question mark?
It doesn't happen very often, but it is our worst nightmare, number
I
one,
bet.
because we will do everything to protect our primary lender in the deal. They are our bread and butter. Without them, there is no us. I think that's
Right.
a US Bank commercial. Anyway, yeah, and so we have instances, and this is kind of my job in the process as well. When one of our borrowers gets their initial approval, it's like a residential mortgage loan. Don't go out and start spending a bunch of money, right? Don't do anything. Hold tight until we get you closed with the SBA.
You're like, money.
Yeah, right. We have had scenarios where borrowers have they've had criminal charges brought against them, which brings an adverse action. We've had issues with their financing, something significantly degrading in their finances. Maybe a lawsuit ensued after they got approval, and now they're in the building, and in that 90-day time frame that we are waiting to close, because we do kind of we have to, for all intents and purposes, no other way to put it, we kind of get in line with the SBA to get them closed. Things happen.
Yes.
People go out and spend a bunch of money. People will call me and they'll go, okay, now that I've got approval, can I go buy that side by side? I'm like, please don't go spend $40,000 on a side by side right now. I know it's a necessity, but could you do it after you're closed, right? And so they'll be like, okay, because again, because this is such a program that is unique. A lot of people at first are like, okay, I've got all my approvals, I'm good to go. And I'm like, there will be one more approval with the SBA to get you closed. Please just sit on your hands. Don't do anything until we get that done, because it's, you know, we don't want to have a problem. But I will, final answer to your question, it has happened. And what happens in that situation? Now the bank is sitting there with a 90% loan to value. That is not their happy place.
No.
And so, right. So they're like, so what they will do is oftentimes if they're able to do so, they will, and again, because it doesn't happen that often, that's when they'll start asking for more collateral. We're going to need to collateralize your home. We're going to need this from you. We want your cash. They have to do anything to protect their interest.
Yeah.
So yes,
That
though
makes
we
sense.
try, yes. And sometimes, you know, in the environmental aspect that you talked about, Lisa Marie, we have had some doozies on environmental, and that's not just to the state of Nevada. That's going to be nationally. You know, environmental is a big concern for every lender, regardless, SBA or otherwise. Everybody wants a clean property. Let's put it
Yeah.
that way.
I guess I would put it in the terms that they tread lightly on the environmental side, really err on the side of conservative,
Yes.
as far as phase 1, phase 2, or, you know, gosh forbid you have to go even beyond that. And I love your example of the side by side. It's so funny, like, oh, I just have to have that now. Well, no, you need to wait, and you're going to have your party and your happy dance in 90 days. Because I think for the business owner, when they get the keys, like, they're like, we're done, we're ready to go, we're excited, moving forward. And yet there's still this other, like you said, approval happy on the SBA loans. There's still all this other stuff that has to happen. And I think, I guess if I put myself in the business owner's shoes, it would be maybe challenging sometimes for people to be like, I need to wait.
Yes. It's very challenging because, again, you know, and we do a lot of projects in rural Nevada also. And some of those projects are quite small in terms of the magnitude of the larger projects that we can do. But for that rural business owner, it's everything. They might need to purchase some heavy duty medical equipment or different things that they have to take care of. It always disheartens me when I'm like, your finances they're tight. I am so sorry, but I don't want any problems with the SBA because we are really their advocate. But they have to be sure to protect us as well. It's like a mutual reciprocity. Like, you do your part, we'll do our part, and eventually we'll get you over that line. But it's not always easy for small business parts out in the, you know, because our office here does loans from the Reno, Sparks, Carson City area, all of Carson Valley, Minden, Gardnerville, Dayton, all the way to Wells, Nevada, and to Ely. That is my territory, and then the northern office of Nevada State Development Corporation. Then our southern office covers the whole southern side of the state.
Yeah. Mm-hmm. You have a big territory, and Nevada we're 90% rural. So for those of you who don't know, you know, we have Reno, and we have in the north and close to Tahoe, and then Vegas down in the south, closer to LA, Arizona. And people always think when they hear that I live in Reno, they're like, oh yeah, I was just in Las Vegas. I'm like, that's 8 hours away through the desert, you know?
I know.
But I consider those to be like one market that's split into two, because I do business all over the state as well. And then tell us about the size of your portfolio. You mentioned that when we were prepping for the show.
You know, our portfolio since 1981 has grown, and again, give and take. Highest point of our portfolio was roughly $2 billion.
Wow.
And, you know, and I've got some stats here. For instance, that would encompass about 2007 loans. And actually, through our portfolio, 18,526 jobs have been created since 1981.
Oh, wow. That's
really good.
Right. Yeah. So the size of our portfolio, it expands and contracts. And so, you know, for instance, in the height of the pandemic, and probably if you looked at our certified development company on a national kind of under a microscope, we are not by far a large certified development company. We have certified development companies in California that will have 10 of me feet on the street that are processing 100 million in loans a year. But one of our biggest years was during the pandemic, and I think that was in 22 that we approved over 70 million in 504 loans, because at the height of the pandemic, you know, in August of 20, the rate in our program on a 25-year fix dropped to 2.2. Everybody was like, woo, free money, right? So that was super exciting. And we, you know, while all the medical professionals were in the hospitals working 24 hours a day, we all had our hair set on fire and were running like crazy people to process, right? Because it was like, this is a great opportunity. We got to do this. You know, this is feasting time. And we didn't want any of our borrowers to miss an opportunity because it was just too great. The rates, of course, you know, started to change more in, specifically early 23. And then, of course, went up to a higher point by the end of 23 and have been coming down. But Yeah, it's been amazing to watch. And we do, we have a servicing team here that services the whole state, Karen and Michelle. And essentially they are handling payoffs each day. Who wants to pay off? Why are they paying off? We also subordinate our position for anybody who wants to get a new first lender. They might have had an adjustment to, their financing. So they'll say, hey, another bank will come in and say, we'd like you to subordinate. We will subordinate. But we do have a real loyalty to whoever our lender is in the deal. And also when somebody comes to us for a loan, the first question I ask them is, who do you bank with?
Yeah.
I want to give them the first opportunity because you're already a client there. So it's kind of important that we take a neutral stance on just about everything. Yeah.
That makes
So
sense.
awesome. I love
Thank you for being on the show today, Sandy. It was
No,
great to break everything down for the
I learned. I love it. I love it when I learn.
No, this has been amazing. Thank you so much for the opportunity. I think I learned some things today too. And I'm going to say one disclosure. Everything I said could be subject to change in the next 5 minutes. So that's it. Yeah.
That's right.
Maybe 45 minutes. Yes.
I feel the same way about my entire life.
Right?
So
Well, mine too. Oh my gosh. Okay, great. Thank you so much, ladies.
Thanks,
Have a
everybody.
wonderful day.
Time. Bye, Sandy.
See you soon.
Bye-bye.